Michael in Ohio says, I have savings accounts at 4 online banks. I move the money around among the accounts to take advantage of higher interest rates. Is there any downside to moving money before the end of the month interest payment has been posted, or can I just move the money where the interest rate is highest no matter what day of the month?
So the only thing you have to look for, Michael, is you have to make sure that you're earning a daily interest calculation. And almost all savings accounts are going to calculate interest daily. As long as you are in a savings account that does not calculate interest monthly, but does so daily, you're fine. And you can, at any point during a month, move money from one online bank to another to another. Now, something I've talked about recently, and I'll emphasize here, is there's a direct advantage right now to tie up your money longer that you don't need. We've seen this big run up in savings rates with the online banks. We've seen CD rates go up quite a bit. We've seen treasuries, which is a more complicated market to buy in, go up. And we, as inflation is being squeezed out of the economy, we're already seeing longer-term interest rates coming down. I think there's an opportunity to lock money in that you can afford to lock in into longer-term CDs, placed through the best place of all is place them through Charles Schwab or Fidelity Investments or another discount broker. They're paying the highest rates on FDIC-insured CDs, and that way you're going to lock in that good rate where the money you can earn in the online savings accounts is going to go down over time as two things happen. As the marketplace decides that inflation is bending, and we as consumers may not feel it yet, may not realize, because our perceptions are always looking back, not forward. But there are so many signs that the inflation heat is cooling. And so that means interest rates will fall over time combined with a slower economy. So that's why I think there's a window of opportunity for probably the next few months to lock in money longer term in CDs before those rates also turn down. And when I say something like that, understand that is, what do they call it in science, a hypothesis? Mm-hmm. It's an educated guess. It is the best information I can give you based on what the tea leaves seem to be reading. And that's where they seem to be headed. Also, if China continues to have turmoil, the reality is a lot of the inflation we've experienced will go away quicker than we anticipated. We've seen some of that with oil that we're going to see in turn at the gas pumps. And so that's the upside to the downside, the turmoil and disruptions going on in China for many different reasons, with the communist dictatorship trying to find its way. And usually they find their way through oppression. When you do a cycle of oppression, you also hurt economic activity in a country.